Hey everyone, welcome back Business Brain Rot. Here we help regular Americans build real wealth without gambling in the stock market. Today we're talking about the single biggest mistake I see investors, both beginners and people who've been investing for 20 years, make every single time the market crashes. And I promise you, if you fix this one thing, you could literally save yourself tens of thousands, maybe even hundreds of thousands of dollars the next time the S&P 500 drops 20, 30, or 50%. I've read through the dot-com crash, 2008, March 2020, and 2022. And thousands of people in our community make this exact same mistake. So what is it? The mistake is selling in panic after the market has already fallen 20 to 40%. That's it. Sounds simple, right? But it's the most expensive mistake you can make. Let me prove it to you with real numbers. Here are the 10 worst drawdowns in the S&P 500 over the last 70 years. 2007 to 2009. Minus 57%, 2000 to 2002, minus 49%, 1973 to 1974, minus 48%, 2020 COVID crash, 34% in just 33 days, 2022 inflation bear market, minus 25%. Now, here's what actually happened if you just stayed invested and did nothing. From the peak in 2007 to today, plus 550% total return. From the peak in 2000 to today, plus 450%. From the low in March 2009 to now, plus 1,800%. From the low in March 2020 to now, plus 150% in less than 5 years. The market has always come back, every single time. But here's the brutal truth. Most Americans don't get those returns. JP Morgan did a study that looked at the average equity fund investor from 2004 to 2023. The S&P 500 returned about 9.7% per year. Guess what the average investor got? For 0.1%, less than half. Why? Because they panic, sell low, and then wait too long to get back in. The first reason: emotional decisions during crashes. March 2020. The market is down 34% in a month. Your $100,000 portfolio is now $66,000. You're seeing headlines like, worst crash since 1929, recession coming, millions unemployed. Your stomach is in knots. You tell yourself, I can't take this anymore. I'm getting out until things calm down. So you sell everything at the bottom. Then what happens? The market bottoms literally the next week and goes on the biggest bull run in history. That $66,000 you had left? If you just held on, it would be worth about $240,000 today. By selling, you locked in a permanent 34% loss and missed a 260% gain from the bottom. That one emotional decision cost you $174,000. Warren Buffett said it best. The stock market is a device for transferring money from the impatient to the patient. So how do you avoid this mistake the next time the market crashes? Here are the 5 rules I personally follow, and I teach everyone in my family and community. Rule 1. Understand that crashes are normal and temporary. Since 1950, the S&P 500 has fallen 10% or more, about once every 1.2 years on average. 0.20% plus bear markets happen roughly every 5 to 7 years. 0.30% plus corrections. About once a decade. 0.50% plus crashes, once or twice in a lifetime. They're painful, but they're scheduled maintenance for the stock market. Rule 2. Have a written plan before the crash. I have a 1-page bear market playbook taped inside my desk drawer. It says, I will not sell any stock or ETF unless I need the money in the next 5 years. If the market falls 20%, I will rebalance by buying more. If it falls 30%, I will go all in with any cash I have. I will turn off social media for 30 days. When emotions are high in a crash, you don't want to be making up your plan on the fly. Rule 3. Keep 1 to 3 years of expenses in safe money. This is the first thing that stops panic selling. If you know your bills are covered for the next few years no matter what, it's a lot easier to ride out a 50% crash. I keep mine in high-yield savings, short-term treasuries, and I-bonds. Right now you can get 4 to 5% risk-free. Rule 4. Turn the crash into a sale. The rich get richer in bear markets because they buy when everyone else is scared. In March 2020, I moved $50,000 from my savings account into VTI Total Stock Market ETF at the exact bottom. That money has more than tripled. 2022 was another gift. The market was down 25%. valuation were the best in a decade. Every crash is a Black Friday sale on the greatest wealth-building machine in history. Rule 5. Stop checking your accounts every day. Studies show the less you look, the better you do. If you checked your portfolio once a year from 1990 to 2023, you'd have seen positive returns 94% of the time. If you checked daily, only 53% of days were up. Out of sight, out of mind works. Look, nobody knows when the next crash is coming. Could be 2026, could be 2030. But I can guarantee you this. When it happens, 90% of people will do the exact wrong thing. They'll sell low out of fear. The 10% who stay calm, follow their plan, and even buy more, they're the ones who retire rich. So do me a favor. Hit that like button if you're committed to not making this mistake next time. Thank you for watching. Remember, the market crashes aren't the enemy. It's actually an opportunity. The real enemy is panic.